Hello everybody, what's going on? Few important updates are coming from SOFI's end. Yesterday, SOFI pulled back nearly 3%, closing around 1719 mark. If you only look at the surface level chart, it's easy to assume this was a fundamental shift in the company's trajectory. But if you realize the underlying mechanics of yesterday's movement, the takeaway is entirely different. This was a macro driven sell off that completely ignored SOFI strengthening micro fundamentals. To understand why this pullback creates a compelling long term setup, we need to trace where the pressure actually came from. SOFI opened yesterday's session surprisingly strong, buoyed by broader fintech tailwinds, including a massive triple beat earning report from Webull that signaled healthy retail trading volume. However, momentum shifted sharply midday when retail giants Walmart delivered earnings. Commentary warning of consumer fatigue. That single macro narrative triggered an algorithmic spillover across growth equities and fintechs. Broad indexes slide, and SOFI was caught in the crossfire. But here is where retail traders panic and institutional investors pay attention. Nothing about SOFI core business model changed yesterday. In fact, economic data released during the same session showed regional manufacturing expansion, while labor metrics continue to build a clear case for rate cuts down the road. For a digital bank and lenders, lower cost of capital environments are a massive long term structural tailwind. When we look beneath the price action at the order flow, the divergence between retail fear and institutional positioning becomes stark. While general sentiment was cautious, dark pool data revealed massive block purchases at the 1790 level, including single trade exceeding $17 million. High volume institutional size prints hitting the ask price indicate big capital stepping in to absorb liquidity during the broad market pullback. Technically, SOFI is testing crucial support zone. The key level to watch remain nearly 1761, backed by the strong historical demand around the 100-day moving average. Furthermore, looking ahead into the second half of the year, fintech engagement is accelerating, particularly driven by crypto activity and diversified financial services. Webull's impressive performance in a historically quiet crypto quarter bodes exceptionally well for SOFI's high margin digital platform metrics moving forward. So, the takeaway here is straightforward. Broad market pullback caused by external retained earning commentary routinely creates temporary dislocation in high growth fintech. SOFI's underlying expansion, potential macro rate cut tailwind, and strong institutional order flow suggest that yesterday's dip is far more indicative of a buying opportunity than a fundamental breakdown. I believe in the second half of 2026, definitely SOFI is going to deliver better numbers. And because of that, we will see some good momentum in its stock price as well. So prepare now. With that said, thank you so much for being here. See you in next one.